Good evening once again to everyone. This is our usual masterclass session, Saturday evening 5 p.m. We're going to first take a look at the sectors, starting off, of course, with the benchmark Nifty. The Nifty on the weekly charts holds really strong. We clearly have a distinct looking slant divergence. A slant divergence is where the trend and the momentum are not in sync. I repeat that when we get these kind of divergences, they do not necessarily mean that the market will come down. They are a sign of slowdown, and generally we tend to see choppiness, non-directional, range-bound price oscillation in the lower time frame. In the lower time frame, which is the daily chart, we definitely have seen choppiness. We have definitely seen intraday choppiness also, severe intraday choppiness as well. And I think that it's going to last. I think it's going to stay. Either the trend will be extremely strong enough, which will go up and reverse the momentum, or the momentum itself will eventually pull the trend down. What will happen, only time will tell us. But the trend is strong. The momentum is weak. We expect choppiness. We come to the daily chart and we had a very, very sharp reversal from Thursday's low. The index has made another new life high. It has given a structural breakout which was looking like a failure, but then things turn around very quickly nowadays. The trend reading and the momentum reading on the daily charts are still intact. So it's not wrong to say that strategically one should keep a cautiously bullish view on the overall market. My 75-minute time frame may have some clear signs of structural slowdown, but these are short-term time frames. The larger picture is still okay, and I think we should brace ourselves for oscillations, choppiness, intraday volatility, but predominantly the directional bias should be on the upside. Does this mean that derivatives traders should not attempt to go short? Well, you may, provided you have a pretty good setup on your charts. And if you do, don't hold on to your shorts for long. I think that applies for long trades as well. Do not hold on to your... This is applicable for short-term traders. For those who are, let's say, a 1 to 5 day kind of a trade, don't hold on to your positions for long. If the market gives you a move, take it. Before I go to the sectoral indices and the Bank Nifty, I come to the stock charts RRG graphs, and this area will give us some understanding of how the market's playing out. First, I'll reduce it to 1 week just to understand how the weekly performance was, and of course it was real estate. Big breakout. It was more of like an ascending triangular breakout that we noticed. FMCG, consumer durables, fin, again that sectors which are essentially in the lagging quadrant participated. Sectors which were in the strong quadrant actually cooled off because they had a great run, especially the oil and gas energy pocket. And there were a mix of performances in the middle. So it was primarily real estate right at the top. Distinct difference from the second most performing sector, 1.5% and 4%. That's a big difference. And on the bottom, we have IT and oil and gas. Now, these are strong sectors. We're slowing down. We'll come to them one by one. I would also like to quickly take a look at the, let's say, Feb is almost coming to an end. It has a week to go. So if I say, let's say 7 weeks, starting from Jan, then clearly it's been completely outperformed by the oil and gas, the OMCs, the Reliance ONGCs of the world, and this pocket has definitely done well, followed by auto and healthcare. So these sectors definitely stay strong, and I like IT is there. I'll come to this, why I say that IT is up there. Come to our charts, and we'll take a look at Bank Nifty. And this is an interesting setup on the daily chart. On the daily chart, we call this a red HHGB, which is a classic pullback long trade. We have a move behind us, so it may look a little tired. What concerns me in this particular chart, whether it will actually go further up or not, is this erstwhile support zone. I'm talking about this area. This is that area which was clearly a support zone which led to this breakdown, a follow through move on the downside as well, consolidation to create some kind of a bottom, and now we have a fresh move on the upside. If we follow classic technical analysis, erstwhile supports tend to act as current resistance. They tend to. It's not that it will do all the time, it will act like that all the time. It can break out and go up, it can. But if it fails to, and if it tends to come down, then the follow-through move can be a sharp one. So Bank Nifty did knock resistances. Bank Nifty is holding below those resistances, and it's at a very crucial level. And in terms of downside level, please, you can put an alert at Thursday's low. Thursday's low is critical for any kind of downsides. Or say, for example, for any kind of upsides. I strongly believe that Thursday's low should not be breached and should not be even close below. So there are two layers to it when I look at a important level. It's not like, oh, the level is broken, now the market will turn. It doesn't act like that. How many times have you noticed, how many times have you experienced that a level gets breached and the market bounces back? That you find some kind of a resistance, the market goes above it, and in a matter of minutes it slips down. So important markers on the charts, breaching them intraday is important. I would say 40% importance, and 60% is closing below it. Because a close below Thursday's low on the Bank Nifty, and I'll be looking for shorts. However, if it holds, the flip side is if it holds, you should expect a move on the upside. This is where I think a shift, a tilt from the private sector, from the public sector to the private sector banks may happen. We will check. We did find a good move in ICICI Bank. Last week we did a trade in Axis Bank also. So there are signs. So Bank Nifty, bullish. Thursday's low, extremely crucial. Wednesday's high, crucial for a breakout on the upside. So again, bullish. Now let's come to auto. Now this is one of the, after real estate, I think this is one of the big sectors which have performed over the last 4 weeks. What concerns me a little bit is a formation of a nice structural divergences with our momentum indicators. There's no sign of weakness here. Now I would quickly take 2 extra minutes to mark this small area where you will notice that the trend was positive and the momentum was negative, and that led to a range bound market. So the result is either of the two. Either the trend will pick up, so the momentum will reverse, or the trend will reverse and the momentum will pick up on the downside. So slant divergences do not always mean there's going to be a reversal. This is a nice classic case. Now coming back to the daily chart, I can clearly see some signs of structural divergences. Need not worry. There is no particular reading on the charts in terms of trend, momentum, weekly trend, momentum. They're all fine and well structured. So there is no particular reason to go bearish, but it worries me to go bullish long at this juncture, especially those heavy weight, heavy duty stocks which led this move. M&M led this move, Maruti led this move, Tata Motors is leading this move, Bajaj Auto amongst the two-wheelers led the move. So the ones which have actually led this move in the auto, I find it little difficult to go long at this price, maybe at lower. So I'm going to avoid. View bullish, that does not mean you have to buy all the time. Auto on the RRG graph, on the other hand, let's quickly take a look at where does it stand. It stands at the leading quadrant. It did slip to the weakening. It did not go lagging. It bounced back. And that's when we had that trend momentum divergence. As of now, it's strong. RRG graph reading is strong. So stay bullish. Consumer durables. Now this is a nice chart. This is a nice chart from the daily time frame. Very, very similar to the Bank Nifty behavior. An uptrend, a consolidation, and now a fresh breakout. Trend and momentum on the daily charts, fine, no problem. Again, you will notice a slant shaping up on the weekly charts, but we will see whether this slant leads to any kind of a reversal or not. As of now, we can say that, okay, consumer durables will try its best to go up and retest its previous all-time high. Highly possible, view bullish, and there's no reason to go contra bearish there either. Energy, this is the pocket which is slowing down, and it's very, very clear. It's very, very clear right on our charts. We can see it on the daily time frame, how the trend and momentum is slowing down. There's a structural divergence playing out on the momentum indicators also. So there's enough readings on the daily chart which tells us, listen, this pack is very likely to slow down. Now, slow down again does not mean necessarily reversal. It can reverse. Weekly is phenomenal. You look at the way the weekly charts have gone up, phenomenal. Is there any sign of, let's say, reversal on the weekly time frames? Not really. So based on the daily time frame, we can expect some downside, some choppy behavior. And I think Friday's low, which was a completely shallow ranged bar, a break below the low can definitely lead to a retest of these fractal lows. You can expect the index to form some kind of a range. Will it fall like this? I do not think so. I don't have that much clarity right now, but I can say it's not the place to go long. And even if you go long or short, it's going to be quick hit and run trades and get out. In terms of short-term triggers, Friday's low is going to be important. Very, very shallow range, but break of Friday's low is going to, pick up some weakness. Coming to the energy over here, if we come to and take a look at the oil and gas, it's right up there. You can see in terms of relative strength, in terms of momentum, it's standing right up there, which is showing some really, really good strength. FMCG, I've been writing in the prep sheet, which I share with you every day evening, that this guy looks like is ready for a bounce back. I was looking at these structural positive divergences shaping up, the momentum picking up, the weekly chart retesting of erstwhile highs becoming lows. It's a decent looking weekly close. Week range is very important going forward. ITC I think did pretty well. So we can expect a little bit of further move. What's the view? Well, the view for the CNX FMCG on the weekly chart is trend down, momentum down, and it's just a halt. The good thing is the halt is at supports, right? One should not be looking to short based on the weekly charts because one, it's at supports. Two, it has already had a multi-week fall. So do not go short here. Maybe some kind of a further bounce back, maybe short-term over bought readings can lead to a fall, but that's later. Short-term bullish view, but medium-term, long-term charts are not that bullish. So the short-term anticipation of bullishness should not be really, really large. It should be short-term bullish view. FMCG and consumer durables, if we come to our RRG graphs, and you will find the tails to be, let me sort it in terms of the tails, that's better. Because FMCG, consumer durables, they were all there in the lagging quadrant. There you go. This is consumer durables and this is FMCG. So you can see they are in the lagging quadrant and they do not have much of relative strength. They're just about to pick up a bit of relative strength momentum. Maybe a further improvement can see them to improving, maybe later on to leading. Understand that RRG graphs flow is essentially clockwise, but the flow is not clean all the time. For example, if I stretch it maximum 30 weeks, okay, 30 weeks is the max data that I can show you. And if I fit the FMCG and if I animate it, you will be able to see how it played out in the last 30 weeks. See? Okay, I'm going to pause. See, this is where it was 30 weeks back. It loses momentum of the relative strength. It starts to lose relative strength. That's how it comes down. Then it goes to the lagging. Then you'll see it goes up and it improves and then it comes down again. Okay, let's see again. See? So the formation, the flow is clockwise, but it's not clean that from here it has to be here and has to be here and here. It's not like that. It can go up and down between improving and lagging. all these things are a function of price. Let's not forget that. That's the most important thing. So FMCG short-term bullish. IT, weekly charts, strong. No problem. Trend-wise, yeah, momentum may be slowing. Not maybe. Early signs of slowdown. My problem with the IT this week was it was choppy. It was decently choppy. It gave an upside breakout. It failed. It almost retested its previous lows, which were their previous highs. So highs and lows are getting tested. So it's kind of choppy in this zone. Infosys came down. Tech Mahindra finally bounced back on Friday. Wipro, HCL Tech. So it's the view is primarily bullish, but timing the trades are getting a little difficult. 75 minutes time frame clearly shows the recent choppiness that the index has gone through. Daily charts are contradicting in terms of trend reading and momentum. Though the overall structure is bullish, but the short-term structure is not in sync, I would suggest stay away with a bullish view. Back of the mind, it should be a bullish view. Metals. Let's quickly take a look at how metals is shaped, positioned to be precise. On the RRG graphs, it's there. Now what it's going through friction. A lot of friction is happening. For example, it did gain some relative strength. It lost the momentum. It came down to the weakening, and it's kind of hovering right there. It's not giving back that easily. So that will reflect on your charts is that whenever it came down, it gave a equally sharp bounce back to all-time high. Again, a very sharp fall, and again an equally sharp bounce. So it's not giving back. We are not seeing a fall, a short-term bounce back, and a big fall. We're not seeing that in metals. It's trying not to do an ABC kind of a meaningful correction on the daily chart or on the weekly charts. It will make life short-term traders little difficult because we have a trend and the momentum which is not in sync in the metals reading. Though there is no structural divergence, this was a clean breakout failure. But then the bounce back shouldn't have extended so much. The bounce back should have taken the index down from here. It did not. So there are signs of bullishness. There are signs of slowdown. There are signs of breakout failures. And it's not going to be easy. Like IT, I think metals also will struggle. If we go by the trend and momentum reading, the reading is bullish. So I think both IT and metals, you keep a bullish view unless trend reverses, with the fact back of your mind that this bullishness or let's say this price behavior in the metals and IT is going to be heavily choppy. So I'm going to trade in and out. I'm not going to sit on it for long. So keep that back of your mind. Pharma has distinct signs of slowdown on the daily chart. It has no such sign on the weekly chart. Nothing whatsoever. Right up there. So as I said, the daily chart should give us some sign of consolidation. These are all signs of consolidation. The low needs to be breached. The low needs to be broken, and we need to have a close below that. Now, sadly, we don't have such a phenomenon. As of now, whatever I can see on the daily chart of CNX Pharma, it's Thursday's low. Thursday's low, not only for CNX Pharma, for the Nifty, and for a lot of stocks, I think is going to play a very, very vital, crucial role if and only if the market comes down from here, or else the market will just drag itself further up. So Pharma is bullish. Be careful below Thursday's low. And then the new fresh breakout. So yeah, very, very clean looking breakout. I didn't expect this breakout to play out that well. You know why? Because I could clearly notice that on the weekly charts, there was this divergence, which led to this choppiness. And then finally this breakout, which means that if this breakout sustains, this red reading on the momentum should turn up. It should ideally turn up. Strong, holding well. We did see some differences. DLF was very strong, Oberoi and the others were not that. So I think it was more stock specific which led this move. But real estate is not one of my preferred sector or stocks to trade once in a while. But yeah, this is one sector which is doing really, really good. So overall, I think the view comes up that Nifty continues to show strength. Nifty continues to stay choppy because of the signs of slowdown on the weekly, which is the case with most of the sectors. It's going to continue to be a stock-specific, thematic, sector-specific movement. And it seems like these movements will last for a day or two, right? So if we get a movement in cement stocks, maybe a day or two and get out. And now again, this mentality is purely from a short-term trader's mentality, right? So yeah, we need to be agile. Last week for us was, I think, pretty good. I think we got some 4, 5 or 6 trades back to back right. We would like to continue this this stretch of positive trades back to back. And for that, we need to be extra careful, cautious, and prudent enough to pick, hopefully, time our entry right. All right. Chali, so we are done with our sectoral analysis. Now we will move forward. We'll update our sheet and then I'll take up your doubts and questions.